This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Tech earnings kick off tonight with Microsoft. The software giant is investing a further $10 billion in AI tool ChatGPT. German manufacturing PMI misses while services beat. That's as the ECB's Lagarde vows to keep policy geared towards taming inflation on the continent. And the UK deficit soars to a record £27.4 billion. That's as inflation-linked debt and subsidies strain public finances. It's basically an inflation story for the deficit. Now, first, let's check in on the markets. We're moving sideways. No huge moves that we need to talk about. There are a couple of things that actually we just need to keep an eye on. First of all, it's moving treasuries. Second, if you look at some of the differentials going out there. And then, of course, a big test with technology stocks that's coming in later as we start to get earnings. Expectations, of course, that the Fed will moderate its tightening campaign are driving a new year rally for assets from tech to emerging markets. But that's also sapping some of the dollar strength and giving breathing room to importers outside of the world's biggest economy. Overall, this is what I'm looking at also in terms of some of the services PMI. It is a little bit backward looking because it's January. Manufacturing PMI coming in at 48.8, a bit better than expected, but it's still under 50, which means that it's a contraction. And then services PMI rising 50.7. That's also a little bit better than expected because it's above 50. It also means an expansion. Now, we also have some top guests this hour. First, we speak about the energy crisis with Stefano Venier, the new chief executive of Europe's biggest gas grid operator, Snam. And then we discuss a global push for wind and solar power with Adair Turner, chair of the Energy Transition Commission, plus our exclusive interview with the chief executive of the world's largest PR agency, Richard Edelman. But first, let's check in on the markets. Tech stocks leading gains on Wall Street in the run-up to earnings this week. That's helped set the Nasdaq on track for its best month since July. Investors turning a blind eye to the risk of a U.S. recession and loading up on stocks that were amongst last year's biggest losers. So let's get straight to Christina Kino, managing editor for Bloomberg City Latest. Thank you, Christina. If you look, actually, are they really loading up on some of these stocks, or is it just a bit of movement as we get into earnings season?
It's probably a little bit of both, Francine. I mean, I think we've definitely seen the bit of revival in tech in January because it just got so battered last year, right? And so you definitely see a few bargain hunters jumping in and thinking, all right, this is the time for me to load up on these things. But there's definitely a subsector of investors that are thinking now it's become a bit of a value sector. And these are some of the tech stocks, especially in big tech, right? We're talking about the FANGs here, becoming really, really expensive at the start of 2022 and then having their fall from grace. And so some investors really seeing opportunities there and starting to treat them a bit like value stocks. Whether that is misguided or that makes sense is another question altogether.
I mean, there's a lot of things that don't make sense in these kind of markets. One of the other things that really caught your eye is the fact that there's a hedge fund, Vantage Point, basically saying there are risks in the U.S. economy.
Absolutely, Francine. And I think that also ties in with the revival in tech and some of the riskier assets that we're seeing in the U.S. markets and really global assets generally, right? There's really this narrative of a soft landing that has enamored investors. And, we know 2022 was such a bad year that investors are really so willing and so eager to latch on to any positive narrative for 2023. And this is definitely at the forefront. But I think we're still a long way to go from seeing that inflation in the U.S. getting back to the Fed's target. They're going to have to do a lot more work to bring that down. And so that really, I think, just should bring up the risk of recession, particularly in the second half of this year.
And so what does it mean for the Fed? Do they need to break the jobs market to get inflation under control?
I mean, it certainly is pointing toward that direction, Francine, just because what we're seeing at the moment is still very much a job-full recession, right? Where we're seeing a little bit of signs of inflation taking its toll on the consumer, yes, and, companies starting to prepare for that recessionary environment with layoffs and things like that. But the job market in particular really has remained quite robust. And we know, for instance, that the Fed has succeeded in getting inflation down to near double digits, to around 4 or 5%. That's the easy part. Getting it back down to target is the harder part, and they may have to turn to breaking the jobs market to accomplish that.
Christina, one of our biggest stories, of course, in terms of corporates is the Qatar Investment Authority boosting its stake in Credit Suisse? I mean, this is not the anchor investor that we thought the Credit Suisse First Boston would get, but does it have, bigger implications for the sector as a whole?
Yeah, I mean, I think at the moment, just given the upheaval that we've seen in banking, we're definitely seeing more signs of, M&A targets starting to crop up, right? I mean, Credit Suisse has definitely been at the forefront of one of these targets for such a long time, especially all the upheaval that it's faced last year. But I think broadly in the banking sector, we're starting to see kind of themes of consolidation. Again, investors kind of starting to bargain hunt for banks that are particularly ripe in the making as a particular acquisition target. And I think, as we head again into this kind of challenging, uncertain environment, you would probably expect to see more of this sort of activity moving forward.
Yeah, I mean, let's see if regulators get behind some of the cross-border acquisitions. Thank you so much, our Christina Aquino, Managing Editor for Bloomberg City Latest. Just on that story with Credit Suisse, I don't know if we have a share price, but it would be great to show it if we do. This is on the back of, if you look at all the trials and tribulations of Credit Suisse, certainly its longtime largest shareholder, Harris Associates, David Harrow, owned about 10% just 12 months ago, now reportedly holding below 3%. So maybe the QIA came in thinking and believing that this was a bargain. Coming up next, we speak with the Chief Executive Officer of Snam, the operator of Italy's natural gas distribution network. We'll have plenty more on that and what it means for the energy complex. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, Italy's natural gas network operator Snam says it aims to make 10 billion euros of investments in the 2022 to 2026 period, pouring funds into the infrastructure required to hit Italy's energy transition targets. Well, joining us now is Snam's Chief Executive Officer. He's Stefano Venier. Thank you so much, Mr. Venier, for joining us on Bloomberg. So first of all, just talk to me about the energy complex. It is quite incredible, given the war in Ukraine in the last 12 months, that we finished 12 months afterwards in a better place where we started. What does it mean for Snam?
It means that we have the opportunity, of course, after this transition to, let's say, reposition the company in Italy, and also thanks to the fact that Snam is the largest TSO in Europe with the entire value chain, since we cover transportation, storage, and LNG infrastructure, to position and support also Italy in a possible new role toward the central part of Europe and the security of supply for part of the southern part of Central Europe that is now affected by the, let's say, drop in flows from Russian gas.
So does it mean that you can also, do you have extra capacity to import, for example, from gas from Algeria or elsewhere?
We will work on that in the sense that for the time being we have used that extra capacity to, let's say, offset the decline in the Russian flows, using that capacity to import more Algerian gas in the short term. But in the midterm we will work on strengthening the south-north transportation capacity to make available for the surrounding countries also some of the capacity and some of the flows we might collect from, let's say, Azerbaijan or Algeria, or even in the mid-long term from Libya.
As investors get to know you, there is, I guess, some investors were maybe disappointed at the margins about a plan that they did not see as ambitious enough in terms of reorganization and structure and what you're planning to do. Was this deliberate so that you can exceed expectations?
Of course, we set the targets in a way that could be considered a bit conservative to that extent, but we wanted to have, let's say, foot on ground and be consistent with the opportunity, let's say, progressively develop this infrastructure. Of course, we have a lot of volatility in the financial markets and inflation, and that will drive, of course, also the development of revenues and profitability, given the fact that we work on fully regulated business with revenues that are driven not only by the investment, but also on the allowed return that is embedding also the inflation and the interest rates in the market.
Talk to me a little bit about M&A. So there are things that are on the block that you're trying to sell. Have you got any interest, and is there anything that you'd be looking to acquire?
I think the primary target is to deploy 10 billion euros of investment. That is the first target. Then we have also a portfolio of associates we manage, and we can use part of this portfolio also to support some acquisitions inside of the country where there are some significant and strategic assets that could represent an opportunity for a company to further expand and further consolidate the role and becoming, let's say, significantly the larger TSO operator in Europe, because thanks to the new floating vessels we will have on stream within the next 18 months, we will become one of the largest LNG infrastructure operator in Europe. We are the largest transportation company and the largest storage company.
So is bigger better? Does it give you pricing power, or does it just make strategic sense?
It makes strategic sense in the sense that it can create a platform for further opportunities to convey additional flows of gas toward, as I said, part of Europe. We set up a sizable capacity in reverse flow from Italy to the rest, to the surrounding countries, and we can leverage on that, and we can optimize the infrastructure. What we have seen during this crisis is the fact that having an integrated operator on TSO makes you in the position to better react on the possible, let's say, changes, and that cannot be only from geopolitical side, but can only be in connection with the transition.
Stefano, talk to me a little bit about some of your holdings, for example, in Terega in France, but also ADNOC in the UAE. I mean, how are valuations looking? Are you looking to sell off some of those stakes?
Not sell off in itself, because these assets are providing a very attractive return. It's about 9-10% cash yield. These assets will be used opportunistically to redeploy capital in, let's say, more strategic assets. And more strategic assets means more in connection with the infrastructure we have in Italy and in the other countries, because we control also a sizable stake in the pipelines that connects Italy toward Austria with let's say, the Russian network, and the TAP with Azerbaijan, and the southern corridor to Algeria.
What kind of price range are you expecting for gas and energy prices in the next 12 months?
I think in the short term, next summer, I think much will depend on the total amount of gas we will have in the storage at the end of the winter season. If the level will be maintained at the current level or sizably more than the year before, in summer we will have a reasonable prices, okay? Next winter, much will depend on how cold the winter will be, and that will influence the development of the gas prices going forward. And finally, if any Russian flows will be still there or they will turn down to zero.
We saw a lot of European heads of state not being behind the Inflation Reduction Act. I mean, really being against the Inflation Reduction Act and some of the subsidies that's happening in the US. But should Europe have a similar plan to accelerate the transition?
I think so, yes. We need to rapidly set up the mechanism to support either the green gases like hydrogen and the carbon capture that is taking ground as one of the solutions for, let's say, reaching the carbon neutrality. As a matter of fact, we don't have a silver bullet. We don't have a technology that can solve all the problems in the transition. We need to support these, let's say, possible technological solutions. And the Inflation Reduction Act acted sizably in terms of investment and support on those technologies, and we cannot run the risk that all the worldwide money will move to United States rather than Europe.
Stefano, thank you so much for joining us today. That was the Snam Chief Executive Officer, Stefano Venier. Now, coming up, we speak to the chair of the Energy Transition Commission on green finance and energy transition for the UK. Don't miss that conversation with Lord Adair Turner. That's coming up next, and this is Bloomberg. Freezing temperatures in the UK have weighed on wind power output just as usage of domestic heating ramps up. National Grid deployed its emergency tool for the first time yesterday, and today asking Britons to cut electricity use in the peak early evening hours. Now, here with me, Lord Turner, Chair of the Energy Transition Commission. Thank you so much, Lord Turner, for joining us. First of all, what's the energy complex in the UK looking like right now?
Well, we are on a transition to a system, an electricity system, which is heavily based on wind. By 2030, 2035, we'll be getting 70% of our annual electricity, I suspect, from wind, primarily from offshore in the North Sea. The inevitable consequence of that is that we have an intermittent supply, and we will have some periods where we have really almost excess supply. We saw it in the first 2 weeks of January. We had mild, windy weather. We were already hitting over 50% of our electricity from wind then, and that will go up. And then we'll have other points when we're short of it. So we'll have to invest in storage, and we'll also have to invest in the sort of techniques which National Grid are now deploying about encouraging people to move their electricity demand away from the peak hours.
So how quickly can that happen so that we don't have to have the coal plants on standby?
Well, I think the coal plants will be on standby for another couple of years, but I think beyond that we will close them down completely. We have a significant amount of gas capacity, and what will happen is that gas capacity over time will be run less and less. It will only run at the peak hours, and eventually we will either add carbon capture and storage to that gas capacity and make it zero carbon, or we will switch it over to hydrogen. Hydrogen which we will make when we have excess electricity and then burning gas turbines when we need it. So we are on a transition to a new zero carbon system. I think we're roughly going at the pace required. So I don't think we should panic or worry about this current situation. And these national gas initiatives are exactly the sort of getting people to focus on the fact that electricity is more expensive at peak hours. It's part of the system.
But is the government focused enough on green energy? So we also had this UK deficit soaring to a record. This is because of inflation. Yeah. Does this just take away all of the momentum in any kind of, real wallet behind the energy transition?
Look, I think in the UK, the transition in our electricity system, I think, is now unstoppable. Right. And I'm fairly confident by mid-2030s, we will have a close to zero carbon electricity system. The bit that I'm worried about is the residential heat system, which primarily relies on gas boilers at the moment, where we have a vision that we should insulate our homes better, install heat pumps, but where frankly we do not have a strategy which sets out...
And it's expensive.
It is in some ways. This is the most expensive bit of it. I mean, let's be clear what will happen to household budgets over the next 15 years. Once people have bought electric vehicles, they will be saving money on their road transport. But on the residential heat side, there is significant upfront investment required before you get the benefit of lower electricity prices, lower electricity use. And for higher income people, that's fine, they can just invest it. Our big challenge is the bottom half of the income distribution. We will need large subsidies to help them insulate their homes, install the heat pumps.
Lord Turner, why not do an Inflation Reduction Act like the US? It gets prices down, it spurs the economy, and we could even see some growth.
Well, look, I think we will have to have significant subsidies. The one thing which I think is probably missing in the Inflation Reduction Act in the US, as best I've seen, is a plan for residential heat. It may be in there, but a lot of other things. There's huge subsidies for hydrogen, both blue hydrogen and green hydrogen, big subsidies for electric vehicle, battery plants, etc. But look, we will have to...
How quickly do we need it?
Well, we are doing some things. I mean, there is support for the battery factory, which Envision is building in Sunderland. And just to do pure disclosure, I am on the board of that Envision battery company. So, yes, we are supporting, as countries are across Europe, a set of battery investments. There are significant supports for hydrogen investments. I think we may need to up the scale of that initial support and think about all the different sectors in the face of the Inflation Reduction Act. I mean, it needs to be said, the Inflation Reduction Act is extraordinary. We went from last May thinking that the US really couldn't get anything through Congress to something which, in some respects, I think is an over-the-top level of subsidy, almost a license to print money for some sectors of the economy.
Yeah, which is why so many European leaders are really against that. Lord Turner, can you talk to me a little bit about, if you look at battery storage, do we have the right technology in place to be sure that this is the one, or will it change 6, 7, 10 times before we get the right battery storage?
Well, look, what's happening on batteries for electric vehicles, but this is also will be true for storage in the grid system, they're going through endless new generations. We talk about Gen 4, Gen 5, Gen 6, playing around with the chemical balance between nickel and manganese and cobalt in the cathodes of the batteries. They are continually improving. I don't think we're going to suddenly have somebody come up and say this is a battery which is 2 times better than the one before. But what we're seeing is maybe 10% improvements in what's called the energy density, how much energy you can pack into a kilogram or a litre. So those technologies are going through endless change. And the good news is there is huge R&D money being put in across the world to doing that.
Thank you so much for joining us. Adair Turner, there's the chair of the Energy Transition Commission. Now, we'll, of course, be covering all things UK every week on Thursdays at 9:30 a.m. in our half-an-hour special. Also, today, the UK government sinking deeper into debt for the month of December as rising debt interest payments and the cost of insulating consumers and businesses from the energy price shock really strained public finances. Now, coming up, don't miss our exclusive interview with the Edelman Chief Executive Officer, Richard Edelman. That's a conversation on the trust barometer and how Chief Executive Officers are feeling about investment in 2023. This is Bloomberg. Tech earnings kick off tonight with Microsoft. The software giant is investing a further $10 billion in AI tool ChatGPT. Euro area services and manufacturing PMIs beat as ECB President Lagarde vows to keep policy geared towards taming inflation on the continent. And the UK budget deficit soars to more than £27 billion, a record for December, as energy subsidies and debt interest strain public finances. We get UK PMIs shortly. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're waiting for some breaking news. It should come up in about 20 or 30 seconds. Some of the main sectors, or certainly some of the main corporates that we're watching out for. Let's start with Credit Suisse. So Credit Suisse actually not really changing that much, but this is the Qatar Investment Authority boosting its stake in Credit Suisse to about 6.8 from 5.6% previously. Now, with the purchase, the QIA becomes the second largest shareholder, just behind the Saudi National Bank. Now, remember, earlier this month, the longtime largest shareholder of Credit Suisse, Harris Associates, with David Harrow, which held at some point about 10%, reported a holding of below 3% for Credit Suisse. So Credit Suisse practically unchanged, but still one of our top most read stories on the Bloomberg terminal. Then UK January manufacturing PMI coming in at 46.7 instead of forecast of 45.5, so a touch better than expected. Anything below 50, of course, is a contraction. Services PMI coming below estimates, so it's still contraction. But it's interesting to see that services worse than expected, manufacturing better than expected. Now, the improving sentiment towards U.S. equities is at odds with a backdrop of weakening economic data and earnings. That's according to Morgan Stanley strategist Michael Wilson. Now, he says that though they are bearish on near-term earnings, they are more bullish than most for 2024. And Wilson spoke on Bloomberg Markets.
If the economy rolls over into recession, then it's very unlikely stocks will hold up. That's not priced. And the reason why it's not priced is because we don't know the answer yet, right? I mean, there is an opportunity for the Fed to perhaps orchestrate a soft landing, meaning no labor cycle. But that's where we differ, I think, from most people, which is if we don't get a labor cycle because companies are hoarding labor, that's actually going to be worse for margins in the short term. And then secondarily, if you don't cleanse it, you don't really have anything to get excited about. There's no re-acceleration then for growth next year. So as bearish as we are on kind of earnings in the near term, we're actually probably more bullish than most on 2024 because we think we're in this, boom, bust, boom environment that we've been talking about for the last several years. And you can't have your cake and eat it too, right? You can't say, oh, well, I'll just look through this valley and then play the next boom. Well, I mean, that's not really, advised. I think if you agree with our earnings call next year, then you almost have to agree with our earnings call this year, and the market won't look through that.
So in terms of how you think this is going to play out, you think this is a near-term phenomenon. You think this is going to happen soon, Mike. Yet at the moment, I'm looking at the soft data rolling over. We're going to get the PMIs tomorrow, but I'm looking at the hard data holding up. I'm looking at the employment data in particular holding up. So which piece of data is going to get the market to pay attention on the economic front and mark stocks lower?
Yeah, I mean, what it always comes down to is earnings. I mean, earnings is the hard data series that drives stock prices the most. I mean, we've always said that, and we continue to believe that. So we're just trusting our process, which is that, you know, the leading indicators for the hard data is soft data. And the soft data has rarely looked this weak. So you have to be basically assuming it's different this time for the hard data not to follow. And, you know, that's not a position that we want to take, particularly given that we just had a rally over the last 3 months, which has been spectacular. We sometimes get coined with being perma bears, but last time we called for that rally in October, and we basically got chased off the screen then. So, what's amazing to me is very few people wanted to play that rally in the fall, and now people want to play it after it's already happened. And the last thing I would say about that is what people are getting most excited about are 3 things. Confluence of China reopening, which is good, and we agree with that. Secondly, gas prices have come down precipitously in Europe, which is maybe keeping them out of a recession, at least in the near term. And then you have the hope for a Fed pivot, which is also a call that the Fed's going to pause after this next meeting. But the problem is you already priced all those things. The valuation now does not reflect the earnings risk that we still see in the U.S., which is not going to change from any of those 3 developments.
All right, a great look there by, I think, Morgan Stanley, looking at some of the opportunities out there. Let's do a quick market check. Now, we are Tuesday, quite a lot going on in the markets. All of this is basically superseded by some of the geopolitics, also concerns out there. If you look at UK businesses, they're signaling also that the output fell the sharpest pace in 2 years. That's what we learned in the PMIs that just came out. UK companies really, worried not only about this potent cocktail of economic headwinds, but also the risk of recession that's increasing. Now let's also get to your Bloomberg First Word News. And Finland has, for the first time, opened the door to potentially decoupling its NATO application from that of its neighbor Sweden. This is after the Turkish President Recep Tayyip Erdogan says he will not support Stockholm's bid to join the military alliance. Well, Turkey had agreed in principle to the applications, but went on to demand concessions from Sweden. Next month, Hungary is expected to become the final NATO member to ratify the candidates, leaving just Turkey. Bloomberg sources say the U.S. has confronted Beijing with evidence suggesting some Chinese state-owned companies may be providing assistance for Russia's war in Ukraine. Now, we're told that the alleged support consists of non-lethal military and economic assistance that stops short of wholesale evasion of sanctions. The UK's opposition Labour Party would work more closely with the European Union as part of a reset of British foreign policy. Labour's shadow Secretary David Lammy is set to outline the plan in a speech later today. Current polling suggests that Labour could win the next general election, which must be held no later than January 2025. Now, the world's largest PR agency sees economic optimism collapsing around the world. According to Edelman's annual Trust Barometer survey, many governments are viewed as unethical and incompetent. Well, the PR company canvassed more than 30,000 respondents across 28 countries. Well, we're now joined by Richard Edelman, the chief executive of Edelman, who also put this Trust Barometer together. And we saw each other, Richard, in Davos, where the mood, I have to say, was maybe a little bit too optimistic for our liking. Overall, and good morning to you, what surprises you the most about the Trust Barometer? Trust is going down, 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 down. At what point does it go back up?
So, Francine, I think the most impressive finding in the Trust Barometer this year is that there's a huge rise in business ethics, that in fact, business is the only institution both competent and ethical, that somehow there's a big reliance on business to step into the void left by incompetent government on societal issues. 85% want CEOs to speak up on issues ranging from sustainability to diversity and inclusion, even geopolitics. So again, the responsibility on business is massive.
The concern, Richard, I imagine, is when you advise a lot of the chief executives, and if they talk too much about politics or foreign affairs, there's always a backlash. We see that with BlackRock on ESG, for example, and the Republican Party. So how do you toe the line?
I think that there's way too much fear that has been caused by the DeSantis-Disney conflict. And I think CEOs need to stand strong and recognize that 2/3 of employees say I'll only work for a company where my values are equivalent to that of the CEO. 2/3 of consumers are belief-driven buyers. There's a new time now for corporations in society.
So, Richard, if you look at the trust barometer, I mean, I'm not seeing anything good apart, what you say about chief executives maybe taking the lead on societal issues. The polarized world is probably getting more polarized. The social fabric, you say, is weakening amid some of these divisions. How does a chief executive make it a little bit better when they have so much shareholder pressure to actually just get the numbers up?
I think the big job for business is to restore economic optimism, Francine. I think the necessity of making sure that people are reskilled, that there are jobs to go into, that we recreate industries in agriculture and others in a sustainable context. We've got to get people to feel good about the idea that their families are going to be better off in the next 5 years. There's not a single democracy in the developed world that's over 35% belief that my family is going to be better off. That's disastrous. I'm in France today. It's 10% in France, 10% in Japan. You can't have trust in institutions when you have such a dire outlook. And so we've got to give people hope for the future. And that's the job of business.
Richard, can business actually, reskill, upskill workers at scale, or will they always fail without the, current support from governments?
Great point. It absolutely has to be a combination of business and government, but it can't be business fighting government. And, for instance, in the US, we've got to make sure that there are connections between business and community colleges so that it's an easier way to transfer workers to the next level of skill. Because we all know that automation is going to take jobs in retail, in real estate, in financial services in the next decade by 15%. So what are those people going to do unless we retrain them?
Richard, I hear this over and over again, that actually, we are too optimistic. This also seems what you're suggesting, that there's too much that we're too much pessimistic actually about the world economy, which is why a lot of families also distrust not only policymakers, but governments around them. Is pessimism in some way useful? So if you're a company and you guide down, if you're very cautious, does it mean that you make less mistakes, or do you think it's a spiral that almost self-fulfills itself?
I want people in companies to lean into the issues and recognize that geopolitics is something that's a new and fundamental part of their equation. That the U.S.-China standoff means that they have to diversify supply chain, but that's also an opportunity for nearshoring or inshoring and job creation. And I love the story of Discover Card, for instance, putting 2,000 jobs into inner city Chicago instead of offshoring for call centers. Again, take advantage of the moment to do two things at once: efficiency as well as improving.
Richard, thank you so much for joining us today. Richard Edelman there, the Edelman Chief Executive Officer. Now, we are also getting some important breaking news out of Poland. This is on the tanks that should be sent to Germany. So Poland, we understand, has formally requested Germany's permission to send Leopard 2 battle tanks to Ukraine. Now, this is something we did also speak to the Prime Minister of Poland last week in Davos. This is something he said he would do. Just a reminder for everyone listening at home or in the office, German law basically requires approval for the re-export of military equipment, meaning that the hundreds of Leopard tanks in Europe can only be sent to Ukraine with Berlin's consent. We understand that for the moment, Germany, if it hasn't gone as far as saying no, it's still very cautious, but it does seem that Warsaw, the government of Warsaw, now wants to work together to assemble some kind of coalition to try and pressure Germany to then send these German-made Leopard tanks to Ukraine. Coming up, we'll also speak to the Investcorp Managing Director, Andrea Davis, live from the IPEM conference in Cannes. That interview with our Danny Berger is next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Europe's largest private equity event is underway in Cannes. This year's IPEM conference comes after the sector experienced a pretty tough 2022, driven by economic and geopolitical uncertainty. Well, let's go live to Cannes and speak to Andrea Davis, Managing Director of Corporate Investment at Investcorp. Andrea, great to speak to you. So thank you so much for coming on. How do you see the private equity world changing? Are there enough targets? Is valuation cheap?
Well, it would be foolish not to acknowledge that it's a very different market than we've seen perhaps 12 months ago. I think lenders are being more careful about who they lend to, but investors are also being more thoughtful about where they put their capital. And that's all led to a slowdown in deal making, particularly in the second half of last year. I think it's too early to call this the first half of this year. I think we've all looking with an air of optimism. And I think we're hearing, different, even listening to you guys in the last 10 minutes, different views of how the macro is developing. I think at Investcorp we do believe there's opportunities out there, especially in the mid-market.
And I was going to ask about valuations. So we do see a trend in private equity markets that we saw over the last 2 to 3 years, in that companies in private equity then hold on to deals for a lot longer. What does that mean for valuations actually in the next 12 to 18 months? What are you seeing out there, and what industries or groups do you want to get involved in?
Well, I think we've seen the softening in the valuations in the public markets, especially in the cyclical businesses. It's a well-known fact that private markets lag public markets, and so we are starting to see some softening in private market valuations, especially those that perhaps value more aggressively. We've always taken the view that if you're holding an asset for 5 years, say, you will be investing through some form of economic cycle, some form of macro shock. So when we approach our valuations, and I think this is the case for many investors, they priced in to valuations some form of economic challenge during the holding period. I think, as I was saying, mid-markets opportunities do exist. I think there's some sectors and geographies that are very interesting. There's, the world is not approaching this macro cycle the same in all areas. We've recently acquired a mid-market business through our Indian private equity firm, and then also just yesterday through our technology fund. So opportunities do exist.
Is it more difficult, Andrea, to raise funds? And what does that mean for the deployment of capital going forward?
I think, as I was saying, everybody's just being a little bit more careful. I think we're looking carefully at track records. We're looking at how people managed through the great financial crisis in 2008. We made money buying the right assets at the right price in that crisis. And it's, if you've got that experience in investing through cycles, I think you can still raise capital. I think it's just everybody is a little bit more careful. So the pace has slowed.
Do you think there are more, in general, restructuring exports, because it's much more difficult, for example, for companies not to breach some of the loan agreements or loan covenants?
I think the restructuring market is busy. At Investcorp, we've never believed in over-leveraging our portfolio businesses. We've always believed that managers operate best when they can really focus on growing the business and on value creation. So I think it depends on the investor and their approach to value creation and leverage.
All right, Andrea, thanks so much for joining us. Andrea Davis, their Managing Director of Corporate Investment at Investcorp. Coming up, an $11 billion case at the UK's High Court could threaten Africa's largest economy. We'll bring you that story next, and this is Bloomberg. Well, turning to Nigeria, the government there could be on the hook for a debilitating $11 billion payout in a trial at the UK's High Court. Let's get more with Bloomberg's Jennifer Zabazajja. So, Jen, thank you so much for joining us. I mean, when you look, it is crazy. First of all, 11 billion is huge.
Yes.
But also, it's pretty incredible to think that it's all playing out here in the UK.
Yeah, and Fran, let me give you one more part of it. This has been going on since 2010. And so this has really been both sides saying their own claims. And what we're seeing at this point in time is more of the same. So really just a little bit of backstory behind this specific case. It is between the Nigerian government and a company called PNID. PNID alleges that the Nigerian government never followed through on a contract potentially for gas supply. Nigerian government, though, says that this deal was built on bribery, on corruption. And so it went from a $6.6 billion arbitration award to now $11 billion. That's a third of Nigeria's foreign reserves. So we're expecting to see the government continue to mount a pretty strong defense because this couldn't come at a worse time for them.
I mean, terrible. I mean, 11 billion. Could they pay it?
Essentially, no. I mean, what the government has already been dealing with is a shortage of dollars at this point in time, a number of foreign exchange issues, and so it will remain to be seen what they'll actually do. But this could deal another blow to Nigerians who are dealing with 21% inflation. A number of government revenue has been down for a number of months, a number of years because of reduced oil production. And so, this incoming administration, we're about a month out from an election, which could serve as a huge, significant guide to what the rest of the continent is going to look like. We're going to have to see what this administration will do specifically with this court case, whether to settle or to keep mounting a defense.
So, Jen, when do we know the actual decision by the High Court? And how crazy is that it's all playing out in London?
It's interesting. It was interesting to see what the first day brought about. I mean, we heard a lot of accusations from the company specifically about potential conflict of interest from the Nigerian government. Nigerian government disputing it, saying that they had a, quote, mountain of evidence claiming that the company was corrupt from the beginning. So the case is supposed to last 8 weeks. That will go into the new administration. And so we don't know who is going to be the next president of this country. But whoever it is going to have to add this to their list of issues that they're going to have to deal with.
Jennifer, thank you so much. Jennifer Zabazajja, they're our Bloomberg Africa correspondent here in London. Now, we're just getting let's catch up with some of the biggest stories that are doing well in the Bloomberg terminals. Let's kick it off with Credit Suisse. Never a day where Credit Suisse is not actually in the news. Now, this was because earlier this morning, the Qatari Investment Authority, we caught up with them also in Davos, today saying that they will boost its stake in Credit Suisse to 6.8% from about 5.6% previously. Now, with the purchase, the QIA becomes the bank's second largest shareholder, just behind the Saudi National Bank, after Credit Suisse issued new shares. Earlier this month, just a reminder, there has been quite a lot of change in shareholders at the Swiss lender because Credit Suisse longtime largest shareholder, Harris Associates, once holding about 10% of the bank, now holding below 3%. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kailey Leinz in New York, and Edwards here in London. And this is Bloomberg.
Bonds are an okay bargain, but really nothing exceptional, particularly when we think we see better opportunities on stocks.
As bearish as we are on kind of earnings in the near term, we're actually probably more bullish than most on 2024 because we think we're in this, boom, bust, boom environment.
I think we're making a bottom long term in this bull market.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. The Justice Department takes aim at Google. The government is set to sue the search giant as early as today for its dominance over the digital advertising market. The UK's budget deficit soars to a record. Meanwhile, new data shows private sector economy in the euro area unexpectedly returned to growth at the start of the year. And Poland has formally requested Germany's permission to send tanks to Ukraine. The decision is the culmination of weeks of pressuring Chancellor Olaf Scholz to drop his cautious approach to delivering the military vehicles. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Kailey, today has everything really, doesn't it? We've got geopolitics to talk about, we've got tech earnings to talk about, and the macro picture.
Yeah, it has everything except trading in most parts of Asia, Anna, because it is still the Lunar New Year holiday week. So that means markets in China and Hong Kong, South Korea, Taiwan, and others were all closed for trading. Really, the only major Asian market that was trading overnight was Japan. So that is where I will focus. We did see a rally for Japanese stocks. Both the Nikkei 225 and Topix Index were up by about 1.5%. And those gains today actually mean they have now recovered all of their losses since December 20th, which of course was the day we got the unexpected shift in BOJ policy, that tweaking of yield curve control. And of course, that tweak to yield curve control brought the cap on the 10-year JGB yield up to 50 basis points. Today, we trade around 42 basis points, up about 3 basis points on the day. And finally, Matt, I would note the Japanese yen is actually the biggest outperformer in G10 against the US dollar, one of the few that is still rallying against the dollar today. It's stronger by about 0.5%. Dollar yen trading right around that 130 level.
All right, we see U.S. futures, Kailey, coming down a little bit, only about 0.2% right now. But after the climb that we saw into yesterday's close, up over 4,000. So futures had a strong rally, and they're coming off of that. U.S. 10-year yield coming down about 2 basis points, still hovering right around the same level we saw yesterday at 349. And NYMEX crude as well, hanging at the same level. It's down 0.5%, but 24 hours ago we saw it almost exactly here, 81.18 a barrel. This is WTI. Obviously, Brent is trading in sync, but at a higher level. Bitcoin coming off about 0.5%, but still at just about $23,000. So 22,889. A lot of these numbers are looking exactly the same as what we saw yesterday at this time, with the exception of futures. So we do see futures coming off, but we had a decent rally, as I say again, yesterday. Anna, what do you see in Europe?
Yeah, here in Europe, Matt, we're pretty flat across European equity markets, mixed at least, going either side of the flat line. The energy sector weighed down by that Brent price, which, as you point out, is tracking WTI a little lower. So that weighs on the London market. We're down around 0.4% on the FTSE 100 right now. We've had lots of macro data out from Europe, and we'll get more analysis, more detail on this in a moment. But just to go to the response we're seeing, the moves maybe in FX don't look huge, but we are coming off the back of some real dollar weakness earlier on in the session. But that has unwound a little bit, as we've seen the market react to some euro data and also some data out of the UK. So in terms of the Eurozone, actually we've got quite a positive surprise here for the Eurozone set of data. The composite number for the euro area coming in positive territory. This is the PMI number. So it's suggesting that we're back in growth for that part of for that economy. That really is in keeping with the more positive stories we've been hearing and telling around the Eurozone economy of late. So that's what's happening in the Eurozone. In the UK, though, things look a little different. We're down 0.5% on the pound this morning. That after earlier gains for the pound, and this on the back of the data that shows that services and manufacturing are both in contraction territory then in the UK. More on that in a moment, and the 10-year yield also responds to that data. In terms of the issues that the European economies are facing, then there's been no bigger one than the higher energy costs, of course. We continue to track this benchmark as it drops back down, now at 58 euros a megawatt hour, down another 10% following some substantial declines yesterday, Matt, in session. It seems that the milder weather, the ample storage, the free flow of LNG that seems to have been to the benefit of Europe. Whether that continues as China comes back online is a question, but that seems to be still pushing down on those energy costs.
All right, we'll watch that volatility continue. Meanwhile, Bloomberg has learned that the U.S. Justice Department is getting ready to sue Google as early as today. The case has to do with the search giant's dominance over the digital advertising market. Bloomberg Quick Take's Alex Webb joins us now for the details. So, Alex, what does the DOJ say? Is this a monopoly?
Well, we don't know yet. This is coming from sources that ultimately this is a second case that the DOJ would be opening. It has been in the works for quite a long time, at least 2.5 years. The really fascinating thing will be to see if or when they announce this, what exactly they're picking on. There are lots of different strands to Google's dominance of the online advertising market. It's whether they've been using strength in one field, for instance, in online and mobile operating systems, to force people to use their advertising lineup of products. So that will be the key thing that lots of people are going to be looking out for.
Okay, so obviously regulation, Alex, is one overhang on some of these big tech names, but there also is the macroeconomic overhang that we are expecting to weigh on their earnings as they begin to report. Microsoft first due out of the gate after the bell today. What are we expecting?
Well, I think some chunks of the market are actually thinking that the bad news has really been front-loaded. The fact that these job cuts, the charges that are going to come out of these job cuts, we've seen something of a rally in the shares over the past few weeks. It's up 9% from a January low. That does, of course, mean, though, that any bad news, if it somehow misses expectations that are already very, very limited, then the stock could be punished further. So, it's 2% revenue growth that people are looking for, which is a very low number in historic terms. Anything less than that will be a bit of a shock.
Okay, Alex, thanks very much. Alex Webb of Bloomberg Quick Take with the latest on the themes dominating the tech sector. Let's get back to the macro. The private sector economy in the euro area unexpectedly returned to growth at the start of this year. That could suggest a softer landing for the region. In the UK, however, output fell at the sharpest pace in 2 years, raising the risk of recession. Bloomberg's UK correspondent Lizzie Burden joins us now. Many voices, of course, already thinking that the UK is flirting with recession. Even the government has said so. Can you break down then these figures that we just had out from the UK, Lizzie?
Yes, Anna. Well, economists had expected that the UK composite PMI would hold steady at 49, but in fact, it fell to 47.8, so below the threshold that separates expansion from contraction. Manufacturing and services both weaker than expected, so another month of weaker activity for the UK. But the good news is there's a fascinating note on the terminal this morning from our UK economists Dan Hansen and Anna Andrade saying, and I quote, "It's touch and go whether there will be a recession in 2023. This on account of all the latest turnaround in the UK economic data. They say if there is a recession, it will be shallow. And what might boost the economy, actually, there's a suggestion from Credit Suisse. They say the China reopening is going to mean that there's lots more Chinese visitors to the UK, and they say that could give us an 8 basis point boost to GDP.
Okay, Lizzie, meanwhile, let's talk about the deficit, too, because we got UK public sector borrowing figures out this morning. That data was also worse than expected. What happened?
Yes, so the budget deficit rose to £27.4 billion in December, had been expected to fall to £17.3 billion. Eye-watering, really. It's the highest December figure since monthly figures began in 1993. Why? Because the government is having to spend on energy support, but more than that, because interest rates have, of course, been rising from the Bank of England, adding to the debt servicing costs for the Treasury. They alone cost £17.3 billion. So it's only going to encourage the Chancellor Jeremy Hunt at his March budget to get a tighter grip on the purse strings. We were already expecting a slimmed down budget, no big tax cuts, no surprises to the markets like Liz Truss's mini budget. He wants to prioritise cutting inflation, cutting the national debt and growing the economy. But on that second point, already we can see that the government's struggling, Kailey.
All right, Lizzie, thanks very much. Bloomberg's UK correspondent Lizzie Burden talking to us about the issues, economic issues the country is facing. Now, Poland has formally requested Germany's permission to send Leopard 2 battle tanks to Ukraine. This according to the Polish Defense Ministry. The decision comes after weeks of pressuring German Chancellor Olaf Scholz to drop his cautious approach to delivering the military vehicles. He's reluctant, really. Mark Champion, Bloomberg senior reporter for international affairs, joins us for more. So, Mark, what is Germany likely to say, and why are they dragging their feet in the first place?
Well, the Germans they will explain that they have a long history with Russia. They had their own history of World War II to be concerned about, and that the image of German tanks fighting Russia in Ukraine is something that they're quite cautious about. The German public is divided. And the government in particular, it's a coalition government, is heavily divided. The Chancellor, Olaf Scholz, is from the Social Democratic Party, which is traditionally quite sort of dovish towards Russia, whereas the Green Party, their coalition partner, is more hawkish. And it was the Green Party's foreign minister who really opened the gates the other day by saying that Germany would not stand in Poland's way if Poland decided to send its Leopards to Ukraine.
Okay, certainly a story we continue to watch. It's been rumbling for weeks, hasn't it, Mark? And it'll no doubt continue to dominate the geopolitical agenda. On another matter, we're looking at NATO and the intended expansion of NATO. Finland has now been floating this idea that maybe they will have to go for some sort of solo entry into NATO after Turkey's Erdogan has tried to block Sweden's accession to the group. Where does this take us?
Yes, I mean, this is Finland has said this is something they may have to consider. It's certainly something they don't want to. They've said from the start they want to do this in tandem with Sweden. But what this is a recognition of is that, where from the beginning Turkey has said it had reservations, had things that it wanted, it's become ever more clear that when it comes to Sweden, the Turks may want a lot more than Sweden's willing to deliver. And most recently, the President Erdogan said that that it may be off the table simply because there was a book burning, a Quran burning incident outside of the Turkish embassy in Sweden by a far-right nationalist. It's not the government in Sweden's fault, but because of freedom of speech and so on, that person isn't going to get jailed. He would be, of course, in Turkey, and Erdogan said this is a matter of respect.
All right, Bloomberg's Mark Champion, thank you so much. And we'll have more on the subject of Sweden later on this hour. We'll be speaking with the country's Minister for Financial Markets, so don't miss that. First, though, let's get a look at some stocks moving in pre-market trading here in the U.S. And I want to begin with Lyft, one of the big outperformers. The stock up about 3.8% after it was upgraded over at KeyBank. The analyst there noting the cost-cutting efforts paying off as well as improving ride-sharing data. So that upgrade is giving that stock a nice lift. There is, however, an analyst downgrade that is dragging on one stock. That would be AMD. It's down about 2.7% after Bernstein downgraded the stock, talking about a weakening PC climate and also semi-destructive, and that's a quote, behavior from its rival Intel. And of course, Intel, for its part, will be reporting today. It's down about 0.5% ahead of those results. One stock or company that already reported is Zions Bancorp. Those results hit after the bell yesterday, and total deposits came up short of expectations. That seems to be what is weighing on the stock this morning. It's down about 2.7% before the bell, Anna.
Kailey, coming up on the programme, Tatiana Puhan joins us, Deputy Chief Investments Officer at Tobin. We'll get into a conversation about perhaps the strength of the Eurozone economy right now, its ability to adapt to new sources of energy. That's certainly taking many by surprise. We're also live in Cannes, in the south of France, as Europe's biggest private equity conference gets underway. We will be hearing from some of the leading figures in that space.
Everything is slowing. The economy is slowing. We are probably entering into a phase of lower growth globally, which will last for decades, but we have to cope with that. And in our case, most of what we do in private equity is impact investing. And on that front, impact investing, the things are not slowing at all.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York with Kailey, Leinz, Anna Edwards with us out of London. We are awaiting tech earnings after the bell. Microsoft, I'm going to kick it off. Texas Instruments also coming out. And it looks like we could see the biggest drop since 2016 in terms of profits for the tech sector in general this quarter. Joining us now to talk about it is Ksenia Galuchko, Bloomberg Equities editor. So, Ksenia, what are we expecting, and what does this mean for markets if tech profits drop so much?
Yeah, Matt, it's very interesting. So while we are expecting this huge drop in their profits, at the same time, the market has been looking ahead. And the NASDAQ has been rallying for the best month since July. And also, it's one of the strongest starts to the year for the NASDAQ in history. I mean, it's been a pretty dramatic turnaround. And it looks like investors are actually much more focused on the future for the tech sector, because the tech sector earnings are meant to rebound in the second half of the year, according to the analysts. So investors are now looking ahead. They're also looking at their cost-cutting measures, and we've seen this week when major companies like Amazon, Microsoft, Alphabet announced major job cuts of thousands of people, the stocks actually rallied in response because investors took that well as a cost-cutting measure.
Yeah, Ksenia, good morning. Yeah, there's a lot of people asking, though, whether that kind of response to cost-cutting measures can be sustained. So in the short term, sure, it improves the margin, and that sounds like a positive. But if it's being driven by negatives, I guess, then you have to wonder how sustained any gains will be, especially as the US is now racing to catch up, I guess. US stocks are racing to catch up with the rest of the world this year.
Absolutely, yes. And you have the likes of Bank of America and Morgan Stanley's Michael Wilson warning investors on being overly bullish on tech, because they're saying that, yes, they're cutting jobs right now, but when they do need to invest in growth, how are they going to do that, right? So this might signal a slowdown from these big tech companies. That's why their earnings and outlooks will be so important to see whether they do see ad sales growth coming back, right? Businesses investing in cloud services and in general in products. Are consumers coming back? China's reopening is actually a major factor here, because China is reopening from a major economic lockdown. So will those consumers drive the sales of these tech companies? This could be a major boon for them.
So it's really more broadly about the macroeconomic picture, Ksenia. And when we look at the economic data, many parts of it have been coming in weaker. We heard from Mike Wilson of Morgan Stanley yesterday, essentially saying that the markets are not properly pricing that weak data. Do we look too optimistic on the probability of a soft landing at this point?
Yeah, it could be a very bad landing if the stock market finally realizes that the recession is indeed coming. So far, investors have been very optimistic. They are betting on a soft landing. They don't think that the Federal Reserve or the ECB will drive the major economies in Europe or the US into a recession, but then they could be proven wrong. And as we've seen with the rallies in the summer, there was a very painful landing after investors realized just how hawkish major central banks are continuing to be. And I think the comments that we've seen from Lagarde this week just reiterate that the central banks will remain hawkish for a while inflation comes down quite significantly. And even then, they might just continue holding those rates at a higher level, which is a concern for the stock market.
Yeah, could be. I mean, it's interesting in that context then, Ksenia, that Bernstein is saying European stocks still have upside after the rally. So despite the fact we've rallied already, and despite the fact we get hawkish commentary coming from policymakers.
Yeah, that's been a very interesting call. So this call in favor of European equities versus the US is becoming more and more popular among major brokers. Since the end of September, the euro market has rallied much more than the US, outperforming it nearly triple, which is really a unique situation because generally the European market always lags the US. So this was a record outperformance. The main reason is that European stocks remain much cheaper, and Bernstein points out exactly that today. And also their earnings recovery is supposed to be stronger than in the US just because the expectations are also lower. And this is also a very cyclical market that benefits from China's reopening. So lots of industrial stocks, the DAX, CAC 40 with its luxury stocks. So all of these factors actually speak in favor of the European market's outperformance.
Ksenia, thank you very much. Bloomberg's Ksenia Galuchko with the latest on the markets. And for more market analysis, you can go to the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. New tensions between the U.S. and China. Bloomberg has learned the Biden administration has confronted Beijing over state-owned companies that may be helping Russia's war effort in Ukraine. The Biden team sees evidence of non-lethal aid being sent to the Kremlin. No one involved is commenting. In Half Moon Bay, California, police arrested the suspect in another mass shooting. 7 people were killed and 1 was wounded at 2 plant nurseries. The 67-year-old suspect was believed to have been a worker at one of the locations. Meanwhile, an 11th person has now died from a separate shooting at a dance hall in suburban Los Angeles. The suspect in that case killed himself. Attorney General Merrick Garland denies that the Justice Department is treating Joe Biden and Donald Trump differently when it comes to classified documents. Special counsels have been appointed in both cases. The White House says the cases are very different and that it's cooperated with authorities. And Bloomberg has learned that digital asset firm Gemini Trust is eliminating another 10% of its workforce. The company, founded by the billionaire Winklevoss twins, remains pressured by a months-long industry slump. Gemini fired 10% of its staff last June as well, after crypto prices plunge. And that, as well as the bankruptcy of Genesis, which is tied to Gemini in many ways, will be topics of conversation on Bloomberg Crypto later today. So tune into that at 1 p.m. New York time, 6 p.m. in London. That is our weekly show that covers the people, transactions, and technology shaping the world of decentralized finance. Anna.
Coming up next, Tatiana Puhan will be with us, Deputy Chief Investment Officer at Tobin. We will get Tatiana's perspective on the year ahead. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Justice Department takes aim at Google. The government is set to sue the search giant as early as today for its dominance over the digital advertising market. The UK's budget deficit soars to a record. Meanwhile, new data shows private sector economy in the euro area unexpectedly returned to growth at the start of the year. And Poland has formally requested Germany's permission to send tanks to Ukraine. The decision is the culmination of weeks of pressuring Chancellor Olaf Scholz to drop his cautious approach to delivering the military vehicles. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. A lot of geopolitics we've talked about already this hour, Matt. But in terms of the markets, back to the markets and expectations fading as we head towards the start of US trade.
Yeah, absolutely. I mean, futures are down and they're coming down a little bit further. Not a huge drop, just about 0.2%, a little more than that at the moment. But we had a decent run up yesterday, so we're still up over that 4,000 level. You can see right now 4,027 on futures, and right into the end of trade yesterday, futures really jumped. U.S. 10-year yield coming down a little bit less than 2 basis points, so still at about 350 right now. It's interesting. We're going to talk with our next guest about institutional rebalancing, and I'm really fascinated to see, what exactly that means. Is there a specific point in time? How much money are we talking about? What kind of moves we're going to see going from stocks into fixed income? Finally, or not finally, but NYMEX crude, a little change right now at 81.44. Finally, Bitcoin, I should say, 23,000 and still holding there. I think it's very interesting that we came up to this level yesterday and we're holding steady right now, 22,921. You can see it's off about 1/3% from whatever the closing time is that we've established for Bitcoin, but it's the same level as it was 24 hours ago. So I continue to find the lack of volatility fascinating in Bitcoin. Kailey, what do you see in terms of pre-market movers?
Well, one of them is, of course, that big story with Alphabet and the DOJ looking to maybe launch an antitrust suit against Google for its dominance in advertising as soon as today. And that is weighing on the stock right now. It's down about 0.9% in pre-market trading. One stock that is essentially flat, though that story could look very different in the post-market session, is Microsoft, because, of course, it will be reporting results after the bell today. Usually those cross just a couple minutes after 4 p.m. So that's one we'll have to watch throughout the day, obviously, but especially after the fact. Right now it is changed less than 0.1% in early hours. It is a bigger change, though, for stock elsewhere in the technology space, the semi space specifically. AMD getting downgraded at Bernstein. The analysts there talking about weakness in the PC market and some destructive behavior coming from one of its rivals, Intel. So AMD is down about 2.5%. But moving on, an upgrade is Lyft. KeyBank upgrading the stock, noting cost cuts and better ride-sharing data. So it is one of the big outperformers in the early hour session, up about 3.8%, Anna.
Okay, a lift for Lyft then. Kailey, this is what we see on European equity markets, down 0.3% on the Stoxx 600. So broadly, we are seeing a little bit of weakness across the European space today. We started out the day trying to catch up with the gains on Wall Street yesterday, but if a lot of that was tech-driven, then maybe less to catch up on. So weakness here in Europe. We had seen weakness in the dollar. That was a big overnight theme as well. That's faded a little bit as we've seen weakness in other pounds, in other currencies, in particular the pound, down 0.6%. But the euro also a little weaker, down 0.1%. maybe we'll call this almost flat, really, because we did have some better data out of the European Union, or the Eurozone, sorry, than had been expected. We saw that the composite PMI for the Eurozone came in above 50, and that was not expected. So as a result, some markets reacting to that. The pound, though, subject to some weaker data than anticipated on the UK, and certainly confirmation that we have services and manufacturing both still in contraction territory coming through in that PMI data for the UK today. This is the natural gas price, the benchmark that we track across Europe. Of course, it's been up as high as 340 euros a megawatt hour. That was the story of last summer. Then the middle of this month, we were down at 55, and we seem to be heading back down towards that, 10% lower for this price, Matt. Given considerable weakness yesterday, it seems that the level of storage, the flow of LNG, the ability to cope with the colder weather when it came, and the limited extent of the cold weather, all of that playing in Europe's favour right now.
All right, we'll continue to watch those prices. Let's get over right now to Tatiana Puhan, Deputy Chief Investment Officer at Tobem. And Tatiana, we're going to talk about earnings, obviously a lot, maybe too much. But before we get to that, I want to talk about some of the kind of back office activity. Rebalancing, institutional investors rebalancing is something you mentioned as a potential headwind for stocks as they go into fixed income. It's become increasingly popular with the yields this high. Are there specific points in time that you watch for this, and how much money do you think we're talking about?
I think it's very difficult to say, when exactly this is going to happen. But I think in particular, because the rally in the market that we've seen makes it more likely, that these shifts might happen. So obviously in the beginning of the year, institutional investors, what they're doing is, and this very often starts actually already in the end of the previous year, they sort of discuss, their strategic asset allocations, and they look into, what should change in our portfolio in a very structural way. And I think there is an agreement amongst experts that what happens currently in markets in terms of, market rally and risky assets seems to be not very much in line with, what you could potentially fear might happen, when actually the continued interest rates hikes are really biting into the economy. And if we look at, forward guidance in terms of earnings that will come in now in the next couple of days, we might also get a better idea about, what this will mean immediately to company earnings and so on. And so I think, what experts expect currently is more like a downside risk to these levels that we currently see in equity markets. And for a pension fund that, is supposed to switch towards an asset class that has become more attractive again, which is fixed income, it could be actually a good moment in time to do that. And once they start doing that, this would obviously then, create some momentum that could, help, or not help, but sort of trigger a mean version of, what we've seen in the beginning of the year. So this rally that, at least experts feel is not necessarily backed by fundamental data.
Yes, Tatiana, good morning. So do you feel there's too much complacency in stocks right now?
Yeah, so I think the risk of recession is clearly underpriced. So obviously, there are different scenarios. So there is also, let's say, a Goldilocks scenario, or there's a scenario, that things will get better from here and so on. But there are also other scenarios. And the question is, to what extent are currently investors pricing this in? And so, yeah, there is actually the risk that this is not priced in well enough, because otherwise I could not explain, this very strong rally that we currently see, in particular also in tech, and in particular also in very large cap tech.
Okay, so are you more skeptical of the US rally or the European outperformance? Because we've seen both to some degree this year.
I'm actually very skeptical of both. So I think with Europe, we should always be a little bit careful, because I think Europe has a lot of structural issues. And so the fact, that Europe now for a short period of time outperforms the US, for me, is not a reason to all of a sudden believe, that Europe is going to be, the big outperformer of the year. So I would be careful with this call. There could be headwinds coming in the moment in time, when the ECB continues to hike rates, and eventually this is going to have an impact, on funding that companies need, and there will be a lot of rollover also on debt this year coming in the euro market and so on. So there are a lot of reasons for me, to be more cautious actually on this euro market rally, and I think also that on the other hand, the US obviously, has its own issues as well.
Yeah.
But I don't think it's very clear, in which direction it's going to go.
Well, if we could return to the subject of earnings then, Tatiana, because you mentioned the risks around that. How appropriately elevated or not is the bar for earnings right now?
So I think, what could happen is actually that these kind of Q4 earnings still come in relatively strong. So I think that's something that, you could actually sort of estimate already from what we've seen, some sort of preliminary numbers and so on. But what I think is what we should focus on is forward guidance. So the impact of inflation and of rising interest rates, of kind of pressure on households, this is something that you see happening with a lag, and it's something which also arises with a lag, obviously, in company earnings. And that's why, for me, what I'm most looking to now, when I look at the earnings announcements that come in this week and next week, I really look into the forward guidance. And this is really interesting to see, what companies expect actually in terms of earnings growth going forward or earnings contraction going forward.
Tatiana, thank you. Thanks for joining us. Tatiana Puhan of Tobin. Coming up on this programme, we are going to talk about Sweden and its role in the European Union. Niklas Wykman will join us, the Swedish Minister for Financial Markets. We'll talk about their presidency of the European Council, a focus on crypto, what are the priority areas, also the Swedish housing market. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an interview with Johnson & Johnson CFO Joseph Volk. That's at 10:30 a.m. in New York, 3:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Now, with benchmark borrowing costs rising throughout the world, housing markets from Canada to Sweden have gone into sharp reverse with no sign of a let-up. Joining us now to discuss and other matters, Niklas Wykman, who's the Swedish Minister for Financial Markets. Minister, very nice to have you with us to talk about Sweden, the housing market in focus, but also to extend the conversation because Sweden has that rotating presidency of the Council of the European Union. Let's start in Sweden, though, on housing. Are you concerned about the big drop in house prices? And are you concerned from a growth or a financial stability perspective?
Thank you so much for having me. To start, I must underline that the Swedish bank system is robust and we have a strong position to handle even a worsened situation. But of course, as you underlined, there has been a drop in housing pricing, and especially, of course, there is some reason to concern in the real estate market and the commercial real estate market, where many debts now come to mature in the years ahead of us, and there will be approximately 15 billion euros a year that need to be refinanced in the Swedish real estate market, and of course. We must safeguard and protect the financial system from any turbulence or instability due to this situation, of course.
Do you see a need, Minister, for the government to intervene in any way to try or to reshape the housing market towards a different type of mortgage system?
Of course, we read the recommendations from the European Union, from the IMF and the OECD, and of course, there is some need for reform, but over the last 10 years, we had this situation where money has been almost free, and of course, many corporations and more households has deepened their indebtedness, and now when money costs again, some corporations will have problem, but the main priority for the political system is, of course, to avoid a situation where corporation debts become a problem for the financial system, and even though the risks are higher now, still there is resilience in the system, and my strong belief that we will carry out this situation without any huge impact on households and corporations' possibility to invest and have a good daily life.
I want to get your thoughts on the Inflation Reduction Act, Minister. It's been contentious, clearly. We've seen some optimism that the U.S. is willing to work with Europe to make changes. How optimistic are you on that front?
First of all, I'm very happy that the US is back in the Paris Agreement and that we will work together for a greener future with less that's a very, very good thing to start with. Second, it's very important, of course, and we will not contribute to start any sort of trade war with the US. On the opposite, of course, Europe, the United States, Great Britain is not a problem in the world. It's the solutions to many of the problems in the world, and we will definitely avoid a trade war. And I'm very happy to hear that the US is interested in a dialogue to improve trade conditions, not worsen them.
Well, a trade war would be a bad thing, obviously, but it seems like good, competition if both sides try and boost subsidies to grow their green businesses. Do you see any outlook for that in terms of Europe doing it, and is joint debt going to be a part of that?
Subsidies, state aid, joint debts, of course there can always on the marginal be improvements for investments and for the green transition, but in the long run to have better conditions for new investments for the green transition, we need good institutional condition. It's national questions on tax policy. There is a European discussion on a better common market for capital to ensure that fast-growing companies can have a good capital supply. So I think we should at first look at normal business conditions and try to improve them and have long-run sustainable solutions for growing corporations and for new firms and for new ideas to come into the market. State aid, subsidies, common debt programs and so on could be discussed, but that's always on the margin. We need good institutional conditions for entrepreneurship to really fasten up the green transition.
If we could turn to the subject of crypto, how has your attitude toward regulation changed over the last several months, given the fallout from the implosion of FTX? And how do you view any kind of broader financial stability risk emanating from that space?
Well, first of all, I think we will be humble in our presidency that perhaps we will not solve the question on crypto on our 6 months as presidents. This is a very new area, and I think we must be. The market is still so small that it has been put very much risk to some individuals. Perhaps some of them not aware of how much risk they are taking, and it's positive that the European Union now will have some regulatory framework to try to pave the way into the future. But how large this crypto will be, it remains to be seen. But the European Union will lead the way, and we will have a framework for dealing with crypto and in the future, and that's a good thing. Where the future will take us, I will say that the jury is still out when it comes to crypto.
Minister, if I could take us to a conversation around the post-Brexit relationship between the EU and the UK and the resilience of money market funds. It seems that the UK is worried about UK investor money that is in EU financial centres, and the turmoil in markets in September threw this into focus. The Bank of England governor has said he's working to improve the resilience of UK money market funds, but he wants Europe to do the same because of the cross-border nature of some of these investments. Is Europe in a position to make money market funds more resilient in the short term?
First of all, let me make a personal remark, and as I already said, that Britain, the European Union, the United States is the solution to the world's problem. It's not a problem in itself. In the European Union now, we're working hard for more resilient banks, which is good. Sweden had a very bad experience in the late 80s and beginning of the 90s of having not resilient bank, having a huge crisis in the real estate market, and in our presidency we will make our most to have more deals and to come further when it comes to more resilient banks. And it's my advice for the whole world to keep their bank system as stable as possible, and the more we can do together, the better it is.
All right, Niklas, thanks so much for joining us. Niklas Wykman there, Swedish Minister for Financial Markets. We appreciate your time. Tune in, by the way, to Bloomberg Crypto. That's today at 1 p.m. New York time, 6 p.m. London. It's our weekly show that covers the people, transactions, and technology shaping the world of decentralized finance as more and more officials consider regulation. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now a look at what is coming up for the rest of the day. At 8:30 a.m. Eastern Time, Oscar nominations will be announced. Then at 9:45, the latest U.S. PMI data following Europe and the UK earlier. Then post-market, we're going to get earnings from Microsoft. That's the first of the big tech companies to report. And in Cannes, thousands of private equity firms are gathering for IPEM, Europe's largest private markets conference, Matt.
All right, very interesting stuff. Let's talk about that conference right now. After a tumultuous 2022 for private equity, driven by economic and geopolitical uncertainty, the sector is looking to bounce back. Over 1,000 companies are gathering in Cannes for Europe's largest private equity conference. Allianz chief economist says the industry is optimistic about the new year.
So what happened in 22 was, there was nowhere to hide basically in the financial markets. And so the private equity world has not been, immune or has not defied gravity. And so people are looking to 2023 a bit more hopeful, thinking that maybe monetary and financial conditions are going to stabilize after central banks are done with hiking very abruptly.
Danny Berger joins us now live from Cannes. So Danny, what are the challenges facing PE now as recession fears are weighing on so many sectors in 2023?
Well, for one, Matt, and probably the biggest, because this is what this industry is supposed to do, is deal making. The flow has really dried up, and we know this just from looking at bank earnings, for example. M&A levels are down dramatically, but one of the big drivers of that, and this is directly connected with the economy, is that banks are really hesitant to give financing right now. Leverage financing is very difficult too. So I spoke, for example, to the TKO deputy CEO who said to me, we're doing deals with less leverage now, so you really need to juice more growth out of the companies. You can't just lever up and expect returns the easy way.
And of course, Danny, this all comes off the back of a year that, with rising interest rates, no doubt was pretty bad for the sector.
It was bad, but this is the thing, Anna, because private capital isn't marked to market, as in it doesn't trade every day like a public exchange does, it looked like the returns were better. Now, whether they actually were or not is up to debate, but it's what hedge funder Cliff Asness has called volatility laundering, this idea that you think you're getting a better return because volatility is smoothed out. But again, it's not just being marked to market. So I spoke with the co-founder of LGT, who manages private capital for the royal family of Liechtenstein, which is great in itself. But he basically said that the industry is in denial. Valuations are going to have to come down at some point.
Danny, thanks so much. Bloomberg's Danny Berger reporting from Cannes in the south of France. That is it for Early Edition. Surveillance is ahead. They'll be hearing from Pamela Gordon, Simon French, among other voices. This is Bloomberg.